What is smart trading? Well, the smart trading approach is one that consists of extremely high probability trading opportunities that are usually due to aberrations from market norms. Now, these opportunities often carry either spectacular potential returns or the potential for consistent income. By the way, hi everyone, my name is Ryan Jones and I want to welcome you to this short smart trading video. Now, smart trading isn't just about the opportunities themselves. It is also about how we take advantage of them. So we have smart opportunities that we're going to trade in a smart way. And this, in essence, is what the smart trading approach is all about. So what do I mean by high probability? We hear that term thrown out in the industry quite often, and in different contexts and different strategies it means different things. So let me illustrate what I mean by high probability. Several years ago I was invited to a conference as a guest speaker, an unpaid guest speaker by the way, when one of these opportunities existed at the time. So I decided to demonstrate what I meant by high probability by offering to pay the $875 each attendee paid to attend this conference if my smart trade did not work out within 90 days. So there were about 200 attendees in my session, which means I was on the hook for almost $175,000 if my smart trade did not work out. That's what I mean by high probability opportunities. So what was this smart trade? Well, at the time, crude oil was priced higher than heating oil, which is a product of crude oil. So you buy crude oil, and then there's an extra expense associated with extracting heating oil from that crude oil. So it makes perfect sense that heating oil should be priced greater than crude oil. Well, at the time, the price was inverted, and that's a very rare occurrence. And just to give you a reference point, right now heating oil is priced above crude oil by 67 cents per gallon. Well, at that time, crude oil was actually higher than heating oil by almost 7 cents a gallon. So it was inverted. This is what I mean by aberration. Here's a chart of the heating oil crude oil spread, and this is based on the futures. So this is a dollar chart that is based on the value of the underlying contracts in the futures market. And as you can see, the price of heating oil does not drop below the price of crude oil very often, and when it does, it doesn't stick around there. So it happened once in '89, it happened once in '96, again in '99, and again in 2000, and that's it. It just doesn't happen very often. You can see that in each of these cases, less than a month for it to move back into the average range. So I told the attendees to buy heating oil and sell crude oil for a spread of negative $2,500. Again, this was based on the value of the futures contract. And I told them it would return to even within 90 days, or I would pay their fee that they paid to attend this conference. Fortunately, it only took about 3 weeks. Now, smart trades aren't just about market spreads or spread relationships. There are also aberrations that can occur within an individual market. Here's a testimonial that I received from a smart trading student several years ago. He said, today I ended my orange juice smart trade in the January contract at 120 for a net profit of $29,916 for myself and $34,315 for my dad. Not bad, a total profit of $64,231 between the two of us. This was a 2-year trade yielding 128% return on a $25,000 account after all was said and done. I would have never considered this kind of trading before taking the smart trading course. JB out of Wisconsin. So what is the current smart trade that I'm talking about having the potential for generating a return of as much as 500%? Well, here's a chart of this particular opportunity. This is another spread, and here's the zero line for this spread. The average, the normal average, is for this spread to be trading between 20 and 35. That's where you see it most of the time. It's still within normal range above that level, and it's still within normal range below that level. But when we drop below zero, that's when there's an aberration. That's when it's abnormal. And it's only done this a handful of times in the past. Much like the heating oil crude oil spread, it's only done it a handful of times. However, unlike the heating oil crude oil spread, When this spread drops below zero, it tends to linger below zero a little bit longer. So you can see here, we actually bought this when it dropped down to about the zero line last August. We ended up taking a very quick partial profit on the position within a month, and then we were able to reestablish that partial position soon after, and then the market began to really drop below the zero line pretty good. So we cost averaged, and we held on to that for several months, and then it moved back above the zero line. We were able to take profits with our cost averaged position, and then it dropped back below, and we have now reestablished our cost averaged position, and we're sitting on a very, very solid opportunity right now. So the risk in this, we're sitting at about negative 14. It went to about negative 19, and it could go as low as 22, 23, 24, negative 22, 23, 24, somewhere around there. It could, probably will not, but that's what you need to prepare for. But we're also entering into a bullish season here in the next few months, bullish seasonal pattern with this spread. So this is very solid opportunity. Now understand that if it goes from negative 14 to its average, the upper end of the average of 35, you're looking at a 500% return based on the norm. And understand that it was there just in April of last year. So this is a very solid opportunity, very, very, very high probability long term. And you can trade this with a small account. You can trade this with as little as $5,000 in your account. And of course, you can also trade this with a big account as well. This is the trade that I am tying to my money back guarantee. So right now, you can get the Smart Trading course at half price, and this is only going to last for the next 2 days, this half price offer. Now once you enroll, you will immediately be provided the exact details for entering the above smart trade. If you do not make back the cost of the course within 6 months on this single trade, I will refund the cost of the course back to you. Now for you to make back the cost of the course, all you need to do is see this price, this spread price, go from about negative 14 to about negative 5, and that's it. And that's if you're trading pretty small. So it does not have to move very much at all for you to be able to realize that potential profit. So I'm putting my money where my mouth is. I am in this trade. I am offering you the entire Smart Trading Logic, the entire 10-hour online course, plus a 72-page manual for free if this one single trade doesn't work out. How much more confidence can I have in this approach? Now there is a chance that this trade takes longer than 6 months to work out. However, I'm still willing to put the time limit in place on this money back guarantee for your own confidence. Remember, the long-term potential with this opportunity is huge. Now you might ask, what if this is not my style of trading? And I get this question and comment a lot. And I actually address this in my self-destructive trader course because this is a critical issue with traders. So I want to ask you a question. Are you trading to make money, or are you trading just for the sake of trading? Because if you're trading to make money, then you need to conform your trading to what works and not merely to what is convenient to your personality. Either trade to make money or stay out of the game, because it will eat you alive. You need to conform to what works. And it's my personal belief that every single trader should incorporate the smart trading approach into their trading plan, if at all possible. My first smart trade was taken in 1992, and it was a profitable one. And this has been the most reliable approach over the last 20 years that I have traded, bar none. Now I've given you every reason to move forward with this opportunity, but I can't do it for you. Don't let this offer slip by. In 2 days, the half price offer is over. In 6 months, don't look back and say, I wish I would have taken that trade. So don't let this slip by. Enroll today by going to the following link.